Okay, peeps, welcome back. So, today we're going to be talking about Bitcoin and all of the major Bitcoin indicators, as well as the chart that I mentioned that I would show you guys in a previous video relating to gold spot ETFs and Bitcoin spot ETFs. So, with that being said, let's get it. So, oh, yes, and we're also going to talk about the Bitcoin miners too. So, before I forget, I did want to mention that, but I also want to mention that the spot gold ETF, when it was approved, as you guys can see on this blog here, and I will leave this in the description for you guys down below so you can check it out for yourself. But between 2004 and 2011, I did mention that it was about a 7 to 8 year time frame, somewhere in there. Gold rose nearly 350%. Following the spot gold ETF, as you guys can see here, November 2024, that's when, according to this chart, it was approved. And then over the next 7 years, it just went absolutely nuts. So the price rose from, it looks like, roughly about $450 a share to roughly about $2,000 a share. So you're talking about a 4x, 4.5x in price. When the spot ETF for Bitcoin got approved, I believe it was roughly around $50,000. I mean, if we got a 4.5x in price, let's say in a much shorter time frame, so i.e. by the end of next year, which would be in line with the crypto cycles, we would be looking at roughly about a $225,000 Bitcoin. Okay. Something else I want you guys to keep in mind is a couple other things here. Number one, the spot Bitcoin ETFs has had the fastest inflows in ETFs in history. Okay. The fastest, the largest growing in the shortest amount of time, period. And there's only ever going to be 21 billion Bitcoins mined ever. Okay. There's a hard cap on the supply. It was created by Satoshi Nakamoto when he or she or they, whoever it is, made Bitcoin. There will never be more Bitcoin. Okay, gold can be mined from the earth at any point in time. There is no hard cap supply on gold. The only way that the supply of gold could ever be capped is if they just simply never find any more of it. And we know that, that the earth is huge. The amount of miles deep they could go in digging is potentially endless. Not to mention there could be gold floating around out there in space. That's possible too, which would further dilute the price of gold. I'm not saying that gold's not valuable. It's just the value of gold is tied to whether there is more of it or not that can be found. So that's the first thing I wanted to mention. And then the second thing that I wanted to mention is the fact that gold's market cap is much bigger than Bitcoin. Okay, Bitcoin currently only has roughly about $1 trillion market cap. That's it. Okay. It's actually quite small compared to gold. So gold's market cap is roughly about 10 to 12 trillion, and Bitcoin is only about $1 trillion. So just to basically be equal to gold, Bitcoin would have to do another 10 to 12x, which means the price, if it were to go to those heights, would be anywhere from, I mean, shoot, you'd be talking probably like a minimum of 600,000, maximum of like 800,000 to 1 million per Bitcoin. I know it sounds crazy, but I mean, Bitcoin since its inception has done like a 10 million X or some crazy thing. I don't even know what the numbers is. It went from 10 cents to 74,000. So think about that for a sec. So there's that. Also wanted to point out to you that we do still have some miners in our portfolio. Okay, we are actually invested in some of these. So as you guys can see, we have 200 shares of HUD-8. Bought a bunch this morning on the dip. A lot, actually. Bought about 60 shares on the dip while it was dropping down because, again, the best time to buy is at a discount. So BTBT, we still have those shares. Nothing's changed on that. We have those long-dated, far-out covered calls. And we also have the 300 shares of CLSK still. These have been getting absolutely smashed, which kind of sucks because, if I would have known that it was going to pull back this much, I probably would have put the sell put at a much lower strike price, but is what it is, lesson learned. So we have 2 puts here, one for HUD-8, one for Riot. Those are going to close at the end of the week. We're probably going to take assignment on those, which we actually wanted to do because we think they're going to go up after the halving. And they are sitting pretty much right at major support. We'll show you that in a minute. So there's this Hut 8 1150 call. Pretty sure that we're not going to get assigned that by the end of the week. So we get to collect the premium and the option will expire worthless. The Hut 8 for the $11 call at the start of next month, that's a different story. We don't know about that one yet. So CLSK, pretty much what we did here is we selected the exact same strike price, so $25, but we went ahead and rolled this one out all the way to January of next year. Why did we do this? Because, well, think about it for a second. If there's a 6-month pullback and or consolidation on Bitcoin and the rest of the crypto market after the halving, which did happen the last cycle, then Bitcoin's not really expected to go to all-time highs until the end of the year anyways. So the Bitcoin miners will probably go up the same time that Bitcoin goes up, which, if the cycle is to remain true, will be roughly about the end of next year, start of the beginning of, or the end of this year, start of next year. So this expiration date lines up perfectly with that thesis. Whether it's going to play out or not, we'll see. We also did check the previous all-time high for CLSK. $25 is lower than the previous all-time high, in case it does not go higher than the previous all-time high, which I think was like $35 or something. But so we safeguarded ourselves from that perspective as well. And in rolling this, essentially we collected roughly about $1,473 in premium that we can currently at this point in time use for whatever we want to, if we want to use it. So just doing some simple math on that. We did also actually get the other I think it was $120 in premium from the previous call that we wrote. This is basically a roll on the previous one, and it cost us, I think, $60 to close it out. So if we divide this by 8, which is roughly about the number of months that we would have to wait for this contract to expire, we'd get roughly about $200 a month in advance. So can't complain too much about that. Now, let's get into Bitcoin. So Bitcoin, as of right now, not really doing much. Going into the halving, that's kind of to be expected. The CPI was a crap show. The CPI, as we told you guys in the previous video, we'll take a look at that right now. So CPI actually was much higher than expected. That's not good. Oil prices are going up, as you guys know. There's a ton of conflicts going on around the world, and the flooding of illegal immigration. We'd talk about a whole bunch of stuff. I don't want to get into politics, but there's a lot of extenuating factors that are contributing to this spike in headline inflation. So the markets didn't like it too much, and as a result, they sold off. And so did Bitcoin and also the altcoins. But as you guys can see, Bitcoin is just resilient. It just does not care. It was like, okay, whatever, CPI, yep, let's go back up again. So that's exactly what's going on here. So it's still really not doing much. It's still kind of chopping up there at the highs, which is to be expected. Usually when Bitcoin's when it's retesting all-time highs, it does do that, and then it snaps straight to the upside. Again, the difference is we're at all-time highs before the halving. Usually we don't get all-time highs until about December of the halving year. So this symmetrical triangle is still in play. The target for that is roughly about $83,000. There is actually some other YouTubers that have mentioned the same pattern, so we're not the only ones. We just happen to spot it in our own time. But this current zone is still between 59 to about 68,000. I want to point out to you guys that you see these wick bottoms here. They keep increasing, going up, 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 up. So we're creating kind of this flat top and higher lows. That's a very bullish sign. So the price of Bitcoin could be about ready to spike back up again. We'll just have to wait and see on that. So we do still have bearish divergence here, as you guys can see on the RSI. The RSI is going down, but the price is going up. That's just kind of a warning sign. It doesn't mean it has to play out, but it's a possibility. So with that being said, before we get too much further into Bitcoin, let's get into the indicators. So fear and greed index, still sitting at extreme greed. Typically, usually the crypto market would kind of sell off by this point, especially going into the halving, since it could be considered a buy the rumor, sell the news event. But the spot Bitcoin ETFs are just eating up all the supply, and that's just, in my opinion, that's offsetting any bearish narrative we would have seen by now. Any pullback we would have seen by now is getting eaten up by the spot Bitcoin ETFs. I think that's what's really going on right now. Because as you guys can see here on the max time frame, We're sitting pretty high up there. Usually when this happens, we have some kind of major drop afterwards, and we just have not seen that yet. So that's what's going on with fear and greed. Crypto, it's sitting at a 19, still very low. It's not at the all-time lows around that 10 area, or even lower down here around 5 to 7, somewhere there. But basically what this indicates is that because it's so low, it's still at a 19. That means that the vast majority of retail traders have not even entered into the crypto space yet. Okay, they have not even come in yet, in my opinion. Because again, generally when the hype is really going, we'll usually see this thing at like a 70, 80, 90, 100. Like you guys can see back here, we're not seeing that right now. It looks pretty dead, which means again, you guys, well, all of us really, according to this metric, are still early. Very similar thing with Bitcoin. Bitcoin's at a 28. The low was like a 12. So you can see this high right here is roughly about a 75. And then you have these two cycle peaks here. So this is when Bitcoin first hit its high, and this is when Bitcoin was getting ready to dump all the way over here. That's when it was at 100. We are nowhere near those levels, which tells me that even with Bitcoin, a lot of the retail has not yet entered the space. So again, the halving calendar, we have roughly about 9 days in total until the halving. That it is slated for the 20th. So 20th, let's see, 3 days in this week, and then okay, so somewhere around the 19th or the 20th, basically the end of next week, is when the halving event will take place. And why does this matter? Well, it matters because generally at the end of the halving year, that's when we get the bullish momentum. And then like Q1, Q2 of the following year, we get the altcoin season, which we, again, have not really seen yet, even though alts are moving up. So MVRV, we're still relatively cheap on this metric. Again, 10 is like, the crypto market's going to explode because there's so much bullishness, and 0 is like it's dead. Nobody cares about it. That's pretty much the extremes there, but we're compared to that. I mean, we're at a 0.2 out of a 10. So I would say this is very undervalued, which means that Bitcoin could go much, much higher according to this metric. So a similar thing with the Bitcoin rainbow chart. This thing's not really even all that expensive. According to this chart, it's still in the accumulation phase. So it basically states that accumulating Bitcoin would be somewhere between 68,000 to 92,000. We're actually on the low end of that range. So we're pretty closer more so towards the buy and not so much more towards the accumulate. And again, just to show you guys, like if we were to get into this mid-orange color, all the way up here at the halving, if we were already there by now, I could actually get it to show up. Give me a second. That price in real time would be roughly about 203,000. So that just goes to show you how undervalued Bitcoin is currently. So here's the NUPL. This is net unrealized profit and loss. This thing is in the belief denial phase. This one's a little bit more bearish looking because once we got into this kind of orange color and the pink color, that's when Bitcoin really started to sell off. But it doesn't necessarily mean that it's going to dump, although this has been a pretty solid indicator of cycle peaks. But again, it's very difficult to time the tops for Bitcoin just based on this metric alone. So the Pi cycle top indicator, this is not the actual indicator, but this is this is how the indicator works. So once again, as you guys can see here, the 111-day moving average and the 350-day moving average, when these two lines converge on each other, that is generally speaking within 3 days of that convergence, that is when the top for Bitcoin is in. As you guys can see, every single time it's happened, it's essentially perfect timing for the tops. And yeah, so we got one right here. These like dotted lines here indicate when they converge. We got one here and we got one here. I actually can't even hover the mouse over it, but I'll show you guys on the chart in a minute. It's very, very accurate. Okay, so the point I want to make here is the lines have not converged on each other yet, even though Bitcoin's at the green line. Last time that Bitcoin kind of touched this green line in 2017, you can see it popped above it, bounced off the yellow one, and then just took off to the upside. And it actually kind of almost did something very similar in 2020. So it came up, touched the green line, kind of chopped sideways into it for a little bit, like we're seeing right now. Looked like it wanted to pull back into the yellow one, and then just took straight off to the upside until we eventually got the converging of the lines. So Bitcoin, just kind of chopping around the highs, could go up, could go down. The halving is in 9 days. We're going to find out if it's a buy the rumor and sell the news, or if it just keeps going up. As of potential pullbacks, I mean, if this thing stops at 59K, if it does pull back, that's a 16% pullback to get back to, let's say, the top of this channel, right around where the blue EMA is, about a 24% pullback. And to get down to the red EMA is about a 38% pullback, which lines up with about that channel level at 44,000. So we're going to take a look at the monthly now. You guys can see the trend line is still intact. This has been a nearly perfect indicator for basically figuring out where Bitcoin could eventually enter into a bear market. We're not even close to that level, as you guys can see. And we're just now starting to get into overbought territory on the monthly. As you guys can see back here, it was much more of an extreme green shade. So according to this, we are actually still not even that overbought on Bitcoin. And you guys can see we had this MACD golden cross back here in September of 2023. And ever since then, it's just been straight up. But there is no MACD death cross, and we're not even close to the MACD levels that we were at before during Bitcoin's previous peak. And also another thing I want to point out is this green candle close here is well above not only the resistance zone, but also the previous candle wicks and body closes. So that's very, very bullish. Now going over to the weekly, we're going to go ahead and take a look at the Pi cycle top indicator, see if that's actually popped up yet or not. So there is no pop-up on the indicator. As you guys can see, there's clearly nothing. Wait, hold up a sec. I think I got the wrong indicator here. So let's try this one more time. There we go. Okay, so no indicator has popped up yet. As you guys can see, it timed this top perfectly back here. And even in 2017, it was very accurate. As a matter of fact, the top of the weekly candle, the green weekly candle before the dump, that's when the indicator popped up. So very, very accurate indicator. So in my opinion, I would say there's a lot of these metrics still seem pretty undervalued to me, which in my opinion means, are we likely to go into a bear market? No. Is it possible we could have a substantial pullback before we go higher? Yes. Yes, I do think that's possible, but in terms of us being at the top, I do not think we're at the top based on what the charts are telling me. So now let's go ahead and get into the miners. So once again, I would say that Bitcoin still looks very bullish. We have not seen any significant reasons to be bearish on this thing yet. So we're going to start with CLSK. So as you guys can see, we did the put way up here, and clearly should have waited a little bit, but that's fine. So this thing is on a trajectory of higher highs and higher lows. That's very bearish as long as it stays above. It doesn't have a close below 1270. I would say that this thing is still actually bullish. I'll show you guys the previous all-time highs here. So the November peak was at 2380. The first peak on Bitcoin, which was obviously the major one, was at $42. So again, our strike price should easily be hit if it goes to $25, and we should be able to get out for a decent profit, plus also some pretty juicy premiums. Can always roll up the price in the future at some point if we want to. Not too worried about that. So there is a potential here for a MACD death cross. We did have some kind of looks to be some kind of bearish divergence that had played out, that did actually play out as of recent on CLSK. So the current support is between 1225 and 1365. Current resistance is 2120 to about 2360, and the wick high here is just shy of $25. So if you wanted to wait to get into these shares, since it's already come down so much, it may not be a bad idea to wait to get into the zone. Of course, it could bounce at these wick lows here. That's a possibility. It looks like many times that's held up, so that's about $15. but from the current support to resistance, about 62% to 82%. And then to the wick high would be a nice 92% profit. So now we're going to go over Mara. This one does look like it's going from retesting this as support to potentially breaking down. So yeah, this one's a little hard to read, but it could still bounce before the end of the week. That's possible, but we did have a MACD death cross here, as you guys can see. They have happened before. Does it mean that Mara is just going to go to zero? No. We had one back here. There was a substantial pullback, and then obviously you guys can see once we had the golden cross, the rip was just absolutely insane. It did like a 3x, 3.5x, something like that. So until we get the confirmation bearish, I would say that this is still support. So it's going to be about $18 to $20. The support zone below that is about 750 to 12.3. And resistance above that is 29 to 33. So one of two options here. You could assume this is going to hold as support and ride the wave up. That'd be about 57 to 75%. Or you could get in now and just DCA to kind of hedge against the possibility of it going down to this next support. And if you did that, let's just say you got your average somewhere in the support, because again, when it was in the support zone, it was in there for quite a while. So from this lower support to the current support is about 80 to 108%, and to the next resistance is about 200 to as high as just shy of 250%. So Riot, this one is bouncing perfectly off of the current support. The only catch here is that it has kind of broken this downtrend line. Doesn't necessarily mean anything, but we'll just have to wait and see. So current support is $8.50 to about $10, and current resistance is $18.70 to about $21. And if you just decided to get in now, you'd be looking at about 94 to 115, even as high as 190%. And something else to keep in mind, this thing has had a MACD and an RSI death cross, but it's kind of choppy. It hasn't fully entered into below the break-even level, which is the bear territory. So it's kind of a little bit difficult to say at this point what it's going to do. Maybe a DCA strategy might be best, not financial advice. So HUD 8 still on the falling wedge, haven't broken out bullish or bearish yet. The MACD on this thing is acting a little weird. It's going from green to red to greens, so it's very indecisive. So as of right now, I would say support is still going to be basically, we'll go with this bear market low here. So this is about $4 all the way up to about $9, and resistance is going to be somewhere between $17.40 to about $22.50. So if you wanted to get in now, just understand the risk going down could be about 57% to the bottom of the zone, or I should say more importantly, to the bear market candle low, about 53%. And the move up could be about 108.6 to 177%. Again, if you got in now and you think it's going to go lower, maybe just a DCA strategy is best. You know, maybe put a little bit in initially and then get more aggressive as it goes lower. So basically, the lower the price goes, the more aggressive you could DCA on a daily basis. Again, that's not financial advice, but that could be potentially a good way to hedge against increasing downside. So BTBT, this one's still very much in chop city. It's not doing much. We had the MACD death cross back here, and it did actually sell off. So current support is between $1.60 to about $2, and current resistance is $4.25-ish to $4.80. The wick high here is up here at about $5.30. So to go from where it is currently to the zone would be about 93 to about 120%, and then all the way up to the wick high, 139%. If you wanted to wait to get into this, well, actually, let me remeasure this because most of these lows bounce right off the top of support at about $2. So let's just say you waited to get in at $2. The difference would be up to 108% and 140%, and then to the wick high would be about 162%. So Cypher, this one I would say, in my opinion, I wouldn't be buying this one because I think like a lot of these other ones are much closer to support zones. If we just take a quick peek at those, you can see that pretty much all of these are sitting on support. This one is a little bit below support, so there's that. CLSK is approaching support. It's still, in my opinion, even cheaper than Cypher. Reason being because Cypher just had a run up. It's probably going to take a little time to get a pullback, so that remains to be seen. As you guys can see, we instead of getting a death cross, we got a golden cross here. So that is contrary to the other miners. So the current price is, or support level is about 210 to 265, and resistance is 490 to about 550. And again, the wick high is 577 per share. So if we were to get a pullback into the zone, the move would be about 36 to 48%. Again, it's a large move. This is generally typical of any smaller cap stock. It doesn't necessarily have to be a Bitcoin miner. The smaller the market cap, the larger the moves, both up and down. So keep that in mind. If you waited to get in at this zone down here at 2 something a share, you'd be looking at about 105% to 132%, and then as much as roughly about 145%. So BITF, this one looks like it's actually trying to break support. So that's a little bit scary, but as you guys can see, the MACD death cross did happen here, and we have sold off since. So where it's going to stop is anybody's guess. This could be a fake out, and it could go back into support and hold in support. That's a possibility. Or if it continues to dump, I would say maybe it gets stopped right here at about the $1.20, $1.30 level. I'm not sure if it's going to go that low or not. That's kind of hard to say, but if it does go below that, the support below that, based on bear market lows, would be about 40 cents to 89 cents. So we'll have to keep a lookout on that. So to give you guys the risk up front, if it drops from here to these candle body tops here, it'd be about 32%. To get back to the zone is about 53 to 79%. So very risky. If I had bought BITF, I probably would not be buying it right now because I'd be waiting to see if this thing's going to pull back more to, get in at a lower price and kind of de-risk any potential drawdown. So if you wanted to get in now, it's up to you. The move back to the top of the range would be about 23%. Up to the next levels, 55 to 89%, and then to the wick high would be roughly about 106%. If you wanted to wait for it to get to these candle tops here, you'd be looking at about 62 to 89%, and then to get to the next zone, 140 to 188%, and then potentially as high as 217%. Now, if you wanted to wait to get back to, let's say, 70 cents at this kind of red low here, which is a swing low, and that's within that zone too, you'd be looking at roughly about 204%, 254%, 350%, 444%, and 494% respectively. So with the miners, what I think is happening right now is Bitcoin's getting ready to go through a halving. Generally, when that happens, I don't know a whole lot about mining, but if I'm not mistaken, I think that the Bitcoin miner doubles. Like the price of Bitcoin has to be double whatever the previous miner price difficulty was after the new halving in order for them to be at break even. So I think what might be happening right now is because Bitcoin's at all-time highs, I think some of these miners are just simply taking profits and they're waiting for they're selling into the Bitcoin halving to basically lock in profits. And then after the halving, the mining difficulty will change. The amount of Bitcoin coming into existence will decrease, of course. And of course, with the demand side, with BlackRock and all those guys buying the Bitcoin, they're probably waiting for the price of Bitcoin to shoot up to like 100, 150, 200,000. And then that's, of course, when Bitcoin has its next parabolic leg, that's when the miners will go up in value. This, of course, is just my opinion. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.